Hello. Welcome to Promova Crypto. Things are getting scary out here, aren't they? It seems that every time we turn around, something else is happening that is a bad omen for the larger global economy. But during times like these, one thing seems the most comforting: buying more Bitcoin. When in doubt, buy and hold. But before I delve deeper into why this is a good strategy, I wanted to take a moment to remind you that I am not your financial advisor. Invest carefully and only with money that you do not immediately need, as all investments carry the risk of loss. There is a growing crisis in the traditional banking system, with banks facing increasing pressure from rising inflation, higher interest rates, and mounting debt. This crisis could lead to a widespread collapse of the banking system, similar to what happened in 2008. Bitcoin and other cryptocurrencies offer a potential solution to this problem, as they are decentralized and not subject to the same risks as traditional banks. Investing in Bitcoin can provide a hedge against the risks of the traditional banking system and may offer significant upside potential as more people adopt cryptocurrencies. Bitcoin's fixed supply and scarcity make it an attractive store of value, particularly in a world where fiat currencies are being debased through quantitative easing and other monetary policies. This fixed supply and scarcity make it a potentially valuable asset in a world where central banks are printing money at an unprecedented rate. Let's be clear, however, as there are risks associated with investing in cryptocurrencies, such as market volatility, regulatory uncertainty, and technological risks. But what's even riskier is the current banking crisis that has been exacerbated by the COVID-19 pandemic, which has caused economic uncertainty and disrupted traditional financial systems. Traditional banks are particularly vulnerable to a crisis because they rely on fractional reserve banking, which involves lending out more money than they actually have on reserve. Thanks to Trump's recent deregulation push, many banks are heavily exposed to risky assets such as derivatives and subprime loans, which could lead to significant losses in the event of a market downturn. Investing in Bitcoin is particularly attractive because it is not subject to the same risks as traditional banks, which are vulnerable to factors such as inflation, interest rates, and government policies. But nothing in life is perfect. Not even Bitcoin. Investing in Bitcoin carries risks, such as market volatility and the potential for regulatory crackdowns. I, however, still feel that the decentralized nature of Bitcoin is a massive key advantage, as it is not controlled by any single entity or government. This decentralization makes Bitcoin more resistant to censorship and government interference, which could be particularly valuable in countries with unstable political or economic systems. Being resistant to the growing authoritarian response that will increasingly categorize this period of history is one of crypto's greatest blessings. The technology itself is also impressive, as Bitcoin's open-source nature means that it is constantly being improved and updated by a global network of developers, which could help to address some of its current limitations. The growth of the cryptocurrency industry is part of a larger trend towards decentralization and disintermediation in finance and other industries, which in this era of ongoing bank collapses of Silicon Valley and others is a very good thing. This growing trend toward wider acceptance of Bitcoin, and to a larger extent all cryptocurrencies, is driven by a desire for greater transparency, accountability, and control over one's own assets. But do yourself a favor, please take a long-term perspective on investing in Bitcoin, and to not be swayed by short-term market movements or hype. It's okay to take gains every so often, but remember that we are expecting much greater things from Bitcoin in the years to come. This is why it is so important to have a clear investment strategy and to make sure to stick to it, even in the face of volatility and uncertainty. As always, please remember to invest cautiously and to engage in further due diligence. Additionally, if you found the content helpful and would like to see more, please do like, share, and subscribe to our channel. Make sure to hit the notification bell so you don't miss our future upcoming content. Till next time, take care.